To Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live rates and do a deep dive into VA loans, but we'll wait just a few minutes to get started, let everybody get a chance to hop on, and let us go live on all the different platforms because we are streaming this on YouTube, Facebook, and LinkedIn. So let us go live on all the different platforms and then we will get started. And in the meantime, we did put the chat up on the screen so you can drop a comment there as you tune in. And I see some people were already dropping comments there before we went live. So thank you for that. Everybody tuning in, appreciate the comments, appreciate you tuning in nice and early. And we'll get started here shortly. Great topic for today as well. Well, thank you for the comments there, Owen and Adam. Thank you for tuning in early. The Mortgage Calculator team tuning in. We'll get started in a moment. Happy Friday to everybody out there. And it looks like we are live on all the different platforms, so we can go ahead and get started. We'll take the chat down. Keep dropping comments there, though, in the chat and questions as well as we go through here. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and every morning, every weekday, we do this show where we go through live mortgage rates of different programs, and then we do a deep dive into a different topic every day. Now, every day on this show, we quote different rates, and we leave out the VA loans because those are only for our veterans and active service members. And today, we're actually going to do a deep dive into that, though. So not only are we going to price some VA loans, but Jose Gonzalez, our sales manager with 27 years of experience as a loan officer and a realtor, is going to pull up some different programs for VA loans that you may not know exist or may not be very familiar with. So we're going to get to that in a little bit, but before that, we'll go ahead and pull up our pricing tool and we'll go through some different rates for some different programs. So Nick, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we will get into it. So as Kyle mentioned, this is our pricing tool for our mortgage professionals. If you would, this will show us the general rates and APR for today. It is August 4th, just after 11 a.m. Eastern. If you would like a full breakdown of all the costs that go into the loan estimate, please get one of our team members. We have over 300 loan officers in 24 states for primary and second homes, and we can do our DSCR business purpose loans in 44 states. So as we do every morning, we will set up a basic scenario so we can compare APRs across the different programs. So we're going to set up a scenario here with a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment for all of our examples. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point to cost, which is a typical request. And we're going to compare our programs. We'll start with conforming conventional as always. Then we'll check out the FHA rates this morning, and then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs. We do not do the VA live because that's only for our eligible veterans and active service members. If you do happen to be eligible, we can quote it no problem. And as Kyle said, our topic for today, Jose is actually going to give quite a few quote examples for VA today. And same with USDA, we usually don't do that live since that's only for properties in a certain USDA eligible area. So if you do happen to be shopping, let us know. We'll quote it, no problem. We'll start here with conforming conventional. We'll do a purchase, 30-year fixed loan, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO of 760 and an estimated debt to income ratio of 40. So with these basic settings, as we do every morning, let's check out the conventional options. About the same as it was yesterday, 7.25 rate, 0.875 discount points and costs, puts our final APR at 7.413. So this is a good option for our customers that qualify for conventional. Obviously, rates are higher than they've been in a long time, so most people would like to see these go down. Hopefully we see some movement later next week. But if for any reason our customer doesn't qualify for a conventional program here, typically the next option we present is going to be an FHA option. So we'll compare our programs, switching from conforming conventional to FHA. Everything else will stay exactly the same as our scenario so that we can compare apples to apples and compare APRs across the programs. So let's check out the FHA options this morning. Again, looks almost identical to yesterday, not much movement, 6.5 rate, 0.75 discount points and costs, and a final APR of 7.084. So as we say every morning for our customers that qualify for both FHA and conventional, definitely look at FHA. It actually might be a touch cheaper, as it is in this case, even including the upfront mortgage insurance and yearly mortgage insurance required. And for our customers that must use FHA for the more lenient guidelines, it's definitely a welcome change there. So definitely check out the FHA options. Now, where we love to specialize here at the Mortgage Calculator, where many other banks and lenders may not have other options if our customer doesn't qualify for either conventional or FHA, that's where we specialize with our 5,000 additional options under expanded guidelines, also known as non-QM. So when we select this option, everything else will stay exactly the same. However, we have a new option that pops up for income verification. Typically, full doc is what we use for FHA and conventional. That's 2 years of tax returns. So we will typically choose a non-QM option to take advantage of one of these alternatives, such as asset-related programs, business bank statement programs, our investor DSCR programs we'll talk about in a second. Personal bank statement 12-month, definitely the most popular program by far. And we also have RSU, stated income, VOE, 1099, P&L, and no income CDFI, which we did on our topic yesterday. As we do every morning, though, we will choose the most popular option here, which is the personal bank statement 12-month. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, will have different write-offs and may not qualify at all, or may not quite get enough income to get the home they really want. So in this case, instead of using tax returns, we're going to use simply their last 12 bank statements to determine a debt-to-income ratio of 40% in this example, using just their cash in the bank, no tax returns involved at all. So most of the time, our self-employed borrowers qualify for double or triple the income and can therefore get the home of their dreams and solve the problem that we have. So let's check out our non-QM problem-solving solutions here. So the best option that popped up today, 7.25 rate, 2.625 discount points and cost, obviously a little more cost here, but the APR of 7.317 is actually amazing for the first time in history. Since we've been doing this show, we have a bank statement option that's cheaper than a conventional option. So today is a little bit of a day in history there. As conventional keeps going up and up and up, our non-QM options keep becoming more reasonable and more reasonable as we see a lot of variation there with the conventional options. So amazing option there to get a touch, just a touch cheaper than conventional with a bank statement option. And you'll see we have a ton of different programs. Some of these programs may allow things like bankruptcies and foreclosures, obviously at a little bit higher rate, and other things that may throw us out of qualification for a standard FHA or conventional program. So these can not only solve the problem with the income, but these programs can also solve other problems for our borrowers as well. So we absolutely love these non-QM programs. Please get with our team. They will find the one that fits best for you. Now, let me go back to the pricer. For our final demos, we always want to do some live rates for investment properties. So whether a first-time investor or seasoned investor, we have some great options. So let's pull up the same scenario, 80% LTV, 20% down payment. And we're simply going to compare our two investment property options. Conventional has some options for investment properties, and then we'll check out our expanded guidelines. Remember, all the government programs, FHA, VA, USDA, they do not allow investment properties. So we'll simply compare these two. We'll start with conforming conventional. Everything stays exactly the same as all our demos. The only thing we've edited is occupancy here, so we can see the loan level price adjustments that have been added when we change to investment property. So here for conventional, just a touch higher than it was yesterday, I think, 7.5 rate, 3.875 discount points and costs, puts our final APR at 7.762. So this is a good option for our borrowers that qualify for conventional. But most of our investors, at least seasoned investors, ask for a higher rate typically in order to reduce the discount points. 3.875 discount points is a ton of money in this example. That's $15,500 that our investor may rather spend somewhere else. And most investors don't mind going up in rate a little bit in order to reduce that cash out of pocket. Fortunately, with conventional, we don't have any options, but that's where we love to present our non-QM. So for the final demo here, we will set up an investment property again, ADLTV again, and we will choose expanded guidelines, also known as non-QM, where we first must select our income. So for an investment property, our most popular option by far, and the most popular loan we do here at the Mortgage Calculator by far, is our DSCR investor loan. That's because it doesn't actually require any income or employment. It is simply going to use the estimated rental income from the property we're purchasing in this example to determine a debt service coverage ratio, DSCR. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows monthly, that is a ratio of 1.00 or higher. We also have options for DSCR ratios under 1.00 where the property may not quite cash flow on a monthly basis. So for our demo, we always put 1.5, which is the highest value. Therefore, we can see all the different options pop up. And finally, for a non-QM investment property, a prepayment penalty is standard. So we always choose 3 years as a standard. There are options for 0 that will cost more and limit the programs. There are also options for 5 years, which will save some money for our borrowers, but will limit the programs. So 3 years is standard. That's what we always select. So let's go into our DSCR rates this morning. So best option here at the top, 8.125 rate for 0.725 discount points and costs. Puts our final APR at 8.182. So good option here for our borrower that needs to save those discount points. Instead of $15,500, in this example is $2,900. So we solved that problem for our borrower. The rate is a little bit higher, obviously, from 7.5 was the conventional option. And here it is 8.125 for DSCR. So obviously a little bit higher rate, but most of our investors will take this option. When we present this side by side, I would say 90% or more of investors that are presented with a conventional option and a DSCR option will typically choose DSCR, not only for the flexibility and to save the discount points, but there are a lot of other benefits as well, closing in an LLC and other things. So tons of different options here. If we scroll down, we'll see different variations. Some of these may allow bankruptcies and foreclosures, just like the other non-QM programs. And some of these may allow things like short-term rental income to be used. So a lot of great options here for our investors looking for a DSCR option. Please get with our team. There are dozens of different variations, and they can find the best one for you. Now we are done with the live rates. Let me go ahead and switch my screen again, and we'll get into today's topic, which is going to be VA loans. So when we do the live show, we don't often get into the VA live rates because not everybody is eligible, unfortunately. Some great programs, but only our eligible active service members and eligible veterans. Of course, they have to have a certificate of eligibility that shows they are eligible for these programs. If they are, there are some amazing options. So we don't do these live every day, but when we do these, definitely recommend our vets pay attention. There are some amazing options, and these are all, basically the government fostering homeownership for you and thanking you for your service, just as we all thank you for your service. But it's a way for the government to incentivize you and give you a great deal. So VA is definitely at the top of our list when we're going through the different loan types. Whenever we can qualify a customer for a VA loan, it's obviously going to have the best benefit for the customer. So if you qualify, please let us know. We would be happy to quote that and present it side by side against any other options as well. So if you're ready there, Jose, let's go ahead and have you get started and present some of these VA options.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. We have some great VA purchase and refi options for you today. As you all know, VA loans are not subject to any mortgage insurance. However, they are subject to a VA funding fee. The VA funding fee is waived if the service member or retired service member has at least a 10% service related disability. If that's the case, then no VA funding fee is applicable. Let me share the options I have with you today. Our first option will be for a uh, one unit purchase. Let's wait for the screen to come up. All right. So here we have one unit purchase, 100% LTV. And in this case, it is not exempt transaction. But here we have a $500,000 purchase price and a $500,000. You will note lowest cost option is 7.125 with our lowest rate option 6.125 at a cost of a little bit over 2.25 points. Our next option is a 2 to 4 unit purchase. Uh, I will state that there is not a loan level price adjustment. As you can see here, we have the same rate options as we had for the one unit purchase. So that's a very good opportunity for our VA borrowers doing their first purchase. It would be a great idea if it would be able to be a 2 to 4 unit so that it could be a primary residence. So you have 7.125 as our lowest cost option and 6.125 as our lowest rate option. So now we're going to put some interesting twists here. We have a VA renovation loan for a purchase. Now, this is a uh, great opportunity if you're buying that house that either you want to remodel the kitchen, remodel bathrooms, do some other renovation work before you move in, or it could be a property that would not be able to close otherwise without using a VA renovation loan because the property would have condition related issues that would not allow it to close, right? It could be missing the air conditioner due to vandalism. Maybe it's REO and the kitchen cabinets were ripped out and the toilets were ripped out and other damages are there that would not allow you to close under a regular finance loan, which would not permit any of those components to be missing. The only way you would be able to close that loan would be with a renovation loan. And in this case, we're using a VA renovation loan. So, again, renovation loan is good for if you have property condition items, or it is good if you simply want to be able to remodel the home and include the cost for that remodeling in the purchase loan. Very good option. Much better than racking up your credit cards. So now we have another example, but a little bit more detail would be our one time close option. This is an amazing example, especially for those markets out there where you may be suffering from lack of inventory. Let me make that a little bit bigger. From lack of inventory, you have not been able to find that property for your borrower. They haven't been able to find the property. They're looking and looking. Well, this option would allow them to buy a piece of land and build the home all with the same loan. That's why they call it the one time close. So buy the land, construct a home, and once the whole process is done, that same loan converts to your end loan. No need to refinance out of a construction loan and incur additional expenses. And also, it is a great tool because, as you know, the construction could take 9 months, could take a year. This basically already guarantees you the interest rate that you're going to have because the construction loan does transition to your end loan. So little bit higher cost here than the regular purchase. So you're looking at 7.25 as your lowest cost option and 6.25 as your lowest rate option. But I will state it is 100% financing, just like the regular purchase loan. So great opportunity. You could be in a market where maybe high LTV financing may present issues when the realtors are out there submitting your offers. Well, this would be a great way to work around that issue. And now we have our VA cash out refinance, which is a 90% LTV product. And you're looking at 7.125 as your lowest cost option and 6.5 as your lowest rate option.
That
And
used to go
then
up
last but
to 100%, but not at the moment, correct? Technically,
right, I mean,
customers might see that technically it's available, but technically no programs are offering it at the moment.
right, because that is an overlay, basically. So, yes, if you look at the VA guidelines, they do allow for 100% cash out refi, but most of the investors out there are adding an overlay and deciding to not go to the 100% limit, which is the case in in the agency space. You could get, like with FHA, the same thing happens where FHA doesn't have a minimum FICO score, but the lenders and investors do add their own overlays and decide how low they want to go. And our last option here is the VA Earl refinance, which is 100% rate and term refinance option. It's a rate reduction loan. Basically, it is a streamlined product as well, right, where there is no credit nor income considerations given. Uh, and it is a VA to VA refinance. So you have to be refinancing an existing VA loan into another VA loan to get your Earl refinance, but a very good option, especially since the customer is going to save money on no appraisal. And if they have any kind of income issues, well, this is the workaround for that. So, very good options for purchases and for refinances for our veterans and active service members.
And to refi out of a regular loan into a VA, it's technically a cash out. Type 2, I believe, is what they call it. Because you can't do a Earl as a rate and term. So remember, as Jose said, Earl means VA to VA. So that's a specific kind of rate and term. Unfortunately, VA doesn't have a rate and term, so you'd be looking at the cash out. But it's a type 2. There's a little bit of pricing adjustments, but it's a little bit tricky there when you go from a non-VA to a VA. So just keep that in mind. All right, I don't see any questions here. Anybody has any questions, let us know. But otherwise, I think you can wrap it up here, Kyle.
Yeah, absolutely. So hopefully that sheds some light on maybe some programs people weren't familiar with that are available for a VA loan. And hopefully some people could take advantage. So remember, we do this show 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic every day. If you want to contact us or connect with one of our loan officers, you can visit us at themortgagecalculator.com. We can pair you up with one of our 350 loan officers from all across the country. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see everyone on Monday at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great weekend.
Thanks, everybody.